We're joined by Mr. HM Bangur, the Managing Director of the company, who joins us on the phone line. Hi, Mr. Bangur. Good morning to you, and thanks a lot for joining us today on Bloomberg Quinn. Congratulations. The numbers look good, though, however, the bottom line is a little bit suppressed because of higher tax rate. First up, if you could just give us a sense, how did the volume growth pan out during the quarter?
During the quarter, our volume growth was about 15% for cement and clinker both.
Okay, could you give us the absolute figure? How much was it? 7.3 million ton or above that? That was the market.
Yes.
What the market was estimating?
It was around 7.3 million ton.
Okay, and what's the guidance going ahead for FY20 in terms of how much volume will you do?
This year we will expect to do something between 29 to 30 million ton. Last year it was around 28 million ton.
Okay, EBITDA per ton, how did that number pan out during the quarter?
It was around 1100, something like 1100 rupees, 1100 odd rupees for the quarter. And this year we are working on increasing the quality, increasing the prices. So little volume lower and the prices should be higher. Our EBITDA should be 1200 plus.
1200 plus, you're saying for the first quarter in FY20 it will be higher? Or for the entire year?
It should be higher by around 5 to 7% EBITDA per ton, and the volume should also be higher by around 10%.
Okay, Mr. Bangur, the cement prices in the first quarter have gone up. That's what we're understanding from our channel checks, and also the input cost for cement companies like you is going lower. So if you could just give us a sense, what are the average cement prices now compared to the last quarter?
Yes, that is a good question, fair question. But compared to the last year, when I say our average price increase is only 2.5%, full year to full year. Now, if one particular quarter was bad last year, it will look like that the quarter to quarter rise is very high. But we expect only 3 to 4%, little less than the inflation, rise in prices for the whole year. 1 year, particular month may be good or bad depending on the so many micro situations. But overall, I don't expect that the full year prices will be very high.
Okay, but how's the demand on ground? Because the prices are going up, the input cost is lower for you, but is there demand offtake?
The demand was very good till the election process started. Once the election process has started, labor has gone for election campaigning and all other things. So cement consumption is not possible. Demand is slow for the time being. Now, within next week, demand should be good again.
Okay, fair enough. Just last question to you before we wrap this conversation. Your power EBITDA in the last 2 quarters has been somewhere about 40 to 50 crore. Is this number sustainable going into FY20? If you could just give us a sense, what's the guidance on the power side?
Yes, power it should be sustainable, something like 40 to 50 crore, because our power production will also increase, and this should be possible.
Okay, Mr. Bangur, we'll leave it at that note. I appreciate you joining us this morning and taking us through how the quarter panned out for you. All the best for FY20.
Thank you.